Minutes past 5 o'clock right here in South Africa, and markets officially closed 11.3 billion rand passing through the markets, and JSE All Share gaining 0.25% in today's session, up 69 points, 32,125. As you can see, DAX and FTSE both in positive territory. Of course, EU Summit under the spotlight today, and the Dow Jones also enjoying over 1% gain as they head into the trading day. Industrial 25 in South Africa flat, and as you can see, Financial 15 enjoying a 1.2% gain. Resource 10 swinging into negative territory as we headed along towards the close of trade in South Africa, and banks gaining just over 1%. On the commodities front, gold flat but slightly to the negative, $1,600 an ounce. Platinum trading 0.5% stronger. Brent crude prices at $118 a barrel, and euro dollar 143.72. Quite a significant rally coming through for the euro. Again, it's got to do with draft resolution coming through for a Greek bailout. Dollar rand 679.57. The dollar is down 1% against the local currency. Time now to take a look at the overall top 40 index, and joining me to discuss market performance is Nicholas Sorour, private clients advisor from Sasfin Securities, and here he is. Thank you so much, Nicholas, for joining us today. Let's delve into some of the biggest movers today. Kumba down 2.4% today, and we know that the stock, of course, came out with headline earnings per share for the full year up 40%. So why down?
I think that's a big question. Everyone's like, why is it down? It was such great results, really good dividend yield and so on. And I think it's a general trend that we find as brokers. It's buy on rumors, sell on fact. So the results are out, we know all the information, and the stock's taking a little bit of a breather. We must be honest and say that it has zoomed up tremendously over the past couple of weeks. I think the other thing is a lot of investors were buying on the back of a possibility that you might see a reduction in their dividend cover. It's currently at 1.3, which is incredibly low, but it has been known to come a lot lower, down to 1. And what that essentially means is that they will be paying out, for every cent that they earn, they'll be paying that out in dividend. Kumba is very well known as a huge dividend payer. So the dividend's great, but I think a couple of people were expecting a little bit more. So a little bit of a sell-off now on the fact of the data. So it's a normal thing. I've got no problem with that. It's perfectly
so we chatted to Kumba Iron Ore a little earlier. As I mentioned, first half earnings jumped around 40% to just over 28 Rand a share. This is off the back of higher iron ore prices. Operating profit increased by 51% to 16.9 billion Rand, while an interim dividend of 21 Rand and 70 cents was declared. A little earlier today, I spoke to the CEO, Chris Griffith, about the group's new Kolomela mine in the Northern Cape and its impact on earnings and production going forward.
Kolomela is very exciting. We think it's one of the few projects worldwide that has delivered on its promise to come in on the time that we told the market. So we've always said that halfway through next year we would start producing, that we would do more than half of the production next year, even though we've only come on board halfway through next year. And the fact is that we, in all likelihood, will be under budget. So we think it's a great story. We already have some of the ore that's now in front of the plant. We are hot commissioning that plant in the second half of this year. So at this point in time, everything seems on track and on budget, and perhaps a little bit ahead of time, and perhaps a little bit under budget.
And of course, as you said, we are expecting continued demand coming through, and the key factor there is that China continues to urbanize. Looking at Japan and Japanese demand, because that was relatively flat over the period, you're also expecting some kind of increase in demand from that region. So clearly, we're seeing a lot of positivity for the future. Is that the right assumption?
Yes, I think that's correct. Even though that Japan had the tsunami and the earthquake, their production has still been flat on 2010. So as they start rebuilding the damaged areas, we expect to see some increase. So we do see very good news story in Japan. We see a very good news story in Korea, and then Europe itself has been up, 7% on the second half of last year. So all round in our traditional markets, that's doing very well, and then China, that's increased, 7 to 8% up on crude steel production. It looks like another good year for steel production in the world.
Tell us about your customer mix at this point in time and whether it's changed over the past few years.
Our customer mix is still the same. In this half year, you've seen that we sold more than we normally sell, about 60% to China. We sold 69% to China, and then the other two markets, of course, came down a bit. Not because we didn't sell to them. Japan came down a bit, but it's because we've actually got quite a number of shipments that have actually just gone from the first half into the second. So our customer base stays the same. We still plan to have about 60% to China, 20% to Europe, 20% to Japan and Korea.
So, Nicholas, I mean, it is all about the Kolomela project. It seems there's a lot of optimism about it. As I said, Kumba down 2.4% today, 513 Rand. Prospects for Kolomela and the new project, it seems that Chris Griffiths was very optimistic going
Well, he
forward.
is. I mean, Kolomela is their big project. It's almost completed. You must understand that Tabazimbi is winding down at the moment. The life of that mine is getting a little bit shorter now. We've still got massive development still at Sishen, which is their major mine at the moment. But Kolomela is the future for Kumba Iron Ore. And as you've seen through the results and what Chris has been speaking about at the results presentation, still looking very, very good there. Mine's at about 94% completion at the moment, and we should get output coming through now in the fourth quarter of this year. So very, very soon we're going to get new iron ore production from that mine, which is great.
Accumulating at just over 500 Rand a share?
Just over 500 Rand a share. I would still,
Yeah.
no, 513, I would be a little bit patient, maybe put some my orders in at 505. Dividend's still good and still sustainable. So 10% dividend yield there, it's spectacular. Very, very good. So a little bit expensive, but could get cheaper.
Okay, fantastic. Lonmin also out with some numbers today. And
yeah, the whole platinum sector is just absolutely disastrous. No one's been touching those stocks at all. And Lonmin, I think, bouncing off 140 Rand a share. We must understand that production update was a significant increase, but they had a rebuild of a furnace the same quarter last year.
Yeah.
So it's just on the back of very, very low volume. Their biggest concern at the moment was strike action. And of course, cost pressures. You know, the price of platinum in Rand terms is up by about 6%. I worked this out, and their costs are up 11%, so it wipes it off no matter what. And that's where the real pressure's coming in on these platinum stocks. Not Lonmin, Impala, Amplats, the whole bunch of them.
And Kumba actually, their cash costs up around 18%.
Exactly, but they've got the iron ore price, which has just gone absolutely through the roof, so they've been benefited by that.
So I can see behind you there, SAB
Yes.
Miller, the last price there,
down 1%?
Down 4%, 0.4%, 0.4%. So
excuse me, I'm looking
Rand.
at the other
So 255 Rand a share, and also this company out with...
they had quarterlies up, you know, just an update on volumes and so on. And what we're seeing is we're still seeing some tremendous volume growth, specifically out of China. They had about a 14% increase with their Snow brand, but still finding it very, very difficult in America, very difficult in Europe. So it's the same story we keep on talking about. Developed markets under pressure, but developing markets, they're still seeing a little bit of growth there. But that stock's also recovered from about 225 up to 260 now, so a little bit heavy in my opinion as well.
Okay, so we know that SAB reported a rise in first quarter beer volumes led on continued growth in emerging markets, but kept the market guessing if it will sweeten its bid for Australia's Fosters. We spoke to Investec Asset Management Beverages analyst Rob Forsyth for his view on whether China will contribute more to profits going forward.
What we've seen is slowly but surely we've seen profit per hectolitre and pricing getting slightly better in the Chinese market. And as it consolidates more, I mean, it's gone from a very unconsolidated state over the last decade, and it's slowly consolidating more and more. And the big thing about the CRE group, which is SAB's partner in China, is that they have the gargantuan brand of Snow, which they get a slight price premium for. So that's the biggest brand in China by far. In fact, I think it's getting pushing to the biggest brand globally at the moment. You're going to get slightly more pricing. And as a result, we've also seen the Chinese are going to be moving over the next decade towards more consumption and less investment. And as a result, you expect wages and going up quite nicely in China. So I expect some bit more pricing power to come into that market. And if you can start getting even, you know, a little bit of pricing power that can fall straight through to the bottom line. So I expect, you know, where it's only 2% of profits, you know, over a 5-year period, it'll be disappointing if that isn't pushing up towards, let's say, upper single digit in terms of percentage of profits.
Buying SAB at these levels?
Not immediately.
255 Rand?
Look, if I've got an ultra long-term client that wants to be exposed in that sector, I've got no problem with it as a business. But I mean, I just think at 255, it's getting a little bit expensive in the short term. So I do feel that we could see a bit of a selling pressure coming there.
And Vodacom slightly flat today, but to the positives.
But this has done so well. I mean, it's unbelievable. It's really, it's actually, wow, I've never expected it to get close to 90 Rand a share. I think, look, having a look at the results, what really surprised me was the amount of new customers they got from South Africa. Now, South Africa is a very developed market, so they're stealing market share from somebody. So it's either going to be Cell C or MTN, and that'll be interesting to see in their numbers looking forward. Average revenue cost per user slightly down, but where the kick is coming from, and that's where you're going to see it on MTN's results, is the data. The growth rate in data is the key now on these wireless operators at the moment, and that's where the money is. But having a look at 89 Rand a share price, it's just a little bit expensive, regardless of how good those results are. I just don't think it's feasible that the company can continue bringing in earnings to keep up that kind of a share price. I still think there's a lot more value left in this one, MTN, than Vodacom at the moment, and that's the one I would be buying.
So
currently.
MTN also positively up, and of course Vodacom closing at 87.85. That's closing price. That was
my opinion, a
the
little bit
last
heavy.
price. A little bit heavy. Okay, so let's just delve further into those numbers. Vodacom reporting an 8% rise in first quarter revenue to 15.6 billion rand, driven by customer growth. Customer numbers gained 20% to 45.4 million at the end of June rather. Here's Dobek Patzer, telecoms analyst from Africa Analysis, with his view on Vodacom's growth potential.
There is growth left, but it's not in South Africa itself. It's not going to be as, I think, positive as it is in other African markets, where we still see a lot of greenfields development, people that haven't used telecommunications at all, that are just beginning to use it now, and they still will then, over the next, say, 5 years, move into higher order value services, spending more of the discretionary income on a monthly basis on telecoms.
Okay, so we saw Massmart again. The saga continues. Just
it's amazing.
when we thought it was put to bed. So government is actually...
Government's getting their finger in the pie again. So a bit disheartening, but we'll have to wait and see. I mean, I don't know if it's saber rattling or if it's anything serious. The market's telling you it's not too serious just yet, and management's been fairly muted on their comments regarding that. But it's a bit concerning, you know, you put this massive deal through and then you turn around a few weeks later, literally, I mean, I don't know what they're going to do to change it, because all the shareholders have been paid. You're not going to knock on everyone's door and say, please pay back your money. We didn't really want the deal to go through. So I think it'll be a very hard slog from government to try and upset that deal. But it just paints a more negative picture from South Africa's point of view of trying to attract foreign investment. We're basically saying that, well, we're not too excited about that. So it's the opportunity cost that's lost in this dangerous talk that we are getting from government at the moment. They're not supporting as much as I feel that they could. But that's an interesting topic to watch, but it hasn't affected the share price marginally. It's actually still up from the lows of 130 that we previously saw.
The movements that I'm also finding quite fascinating is the banks over the past few sessions. I mean, Old Mutual's up 2.7%, Nedbank up 0.4%, ABSA, from what I'm seeing, up almost 3% today. So what is
happening
going on
there? Well, I think if we look at
ABSA's releasing results early August.
Look,
so
it'll be nice to see what the banking results are going to look like. I mean, our opinion is that financials, we're really not interested at the moment. I still think it's a very, very difficult environment for them to be operating. And I've mentioned this time and time again. I still like the Ables, which is right at the top left there, and the Capitex. But when it comes to the major banks here, it's very much a sideways movement that we've seen all year. If you look at the Financial 15 index, it's exactly where we were. So, I mean, you will get volatile movements here and there, but it still doesn't excite me at all. So nothing really specific that I would suggest just by looking at that.
Okay, so what are you buying right now?
Well, I'm actually buying this one right now. Naspers. It's right here, so it's an easy one to point to. I still believe that there's growth there, and it's come down from about 410. And anything close to around about 360, 365. It came down to about 367 today, I saw, and I nibbled it a little bit there. So I quite like that one. And then having a look at Sasol as well. I've been harping on about this for a long time. If you can buy Sasol at the correct price, I think you're going to make a lot of money.
So what's the correct price? It's sitting
correct
at
price for me would be 350
Rand.
and below. I was happy with anything below 360, but I still think 350 and below. I'm looking forward to some results out of there. The Rand has weakened and the oil price continues to remain strong. So I'm expecting some good results from Sasol. It's something that you should all have in your portfolios, absolutely.